showcasing is the rest of silver backtesting, and then I'm also gonna. Oh yeah, I've also got videos to upload from yesterday's shit. We don't want to just keep making videos, basically just talking to ourselves and then not upload them. So, yeah, I'm still like working with obviously this because like I really do see its potential in being something really cool. And then I think so. But what I'm gonna do is I'm also gonna pull up some forex pairs too. So like I can just press if I'm on the computer, which I'll never probably be open the computer first thing in the morning for a very long time, unless like a major change happens. I'm like, right, look, we can't keep doing this. We've got to. I don't know. I think the phone's fine, to be honest. For me, I haven't had a problem. It's like I haven't had a problem with that doing chart markups on my phone and stuff. But anyway, yeah, and I'm gonna pull up some other forex pairs to trade. So like random ones, like for example GBP, ORD or whatever, right? But yeah, what I've also realised too is, by the way, whilst I'm doing this, I'm gonna just keep marking up my charts and stuff whilst I talk of what like I've noticed and picked up upon is this candle range theory thing. I've been doing like I've been I've basically been doing something along the lines like to this for a very long time. Like daily strong bar. Like I refer to it as SABC, strong and not sufficient anatomic bar close, because it's like a sufficient like anatomy of a candle, so bar close. So it's like the open handle close is sufficiently bullish. For example, a bullish SABC or bearish SABC, right? Like I'm pretty sure I've got like things SABC. This was from ages ago. I don't even know what this goes. Daily strong bar closed. I said 9 out. Yeah, I remember this. We were doing this in the last year. That's relatively new. This is new too. But I definitely have also noticed that for some reason I gel and click with the TTFM. I'm gonna all refer to it as TTFM. Like I'm not referring to it as CRT. Like me, it's fucking like, I don't know. And I'm pretty sure the founder of CRT or whatever. Don't get us wrong. I'm pretty sure it's that Romeo guy, and yeah, there's not one single like P&L thing of him on his Twitter. There isn't for me either, but there is on my YouTube, and in multiple videos. So, but I'm not gonna lie to you, this month we took an invalid trade only, and it was a loss. That's it though, and yeah, I do have this on. It's just like different, so that's why I got it on. It's different. Okay, there could be a trade here. But yeah, like what I've like there's a lot of things on my head right now. Maybe I should kind of like write them down just so I don't forget, because it's kind of important. So, thoughts on being on going for more of a V2, realization, TDFM sticks seriously well, standard TDFM and 4-hour TDFM targeting one-sided distinct intent to trade that market participants operating on X given occasion have with regard to what prices are available for transacting at that's the same for the daily too. So like this is for the 4 hours of 7, so that region. So like, which is the same for the daily, where where a strong sort of intent plagues the region that X underlying products marketplace is that the participants operating on this occasion have shown a strong interest with one side of the market over the other. This price region. Yeah. Anyway, yeah. And then TDFM Amas. I'm just gonna call it that. I don't give a shit. Possible 1M model type approach, inspired by. Let me just find the photo because there's some guy that like who popped up on my Twitter, which you've got to kind of be careful of things like this. Because like I went onto Twitter just before, right, to find like this thing what I'm going to talk about in a sec, and I found myself just skating around instantly. Because things that are on your For You page catch your eye, right? And like you can easily be drawn to then continuing to look further into whatever it is, and then you're caught in the algorithm. So, and it actually does work. So he's called Karabi. You know what's kind of crazy? That guy called Lanto Trades on Twitter, like 600k months, like yo, like you know, I think if I was like right, if it is true, right, and like he's going on the way he is, like full respect, like he's got like, but like yo, it would make sense that you would probably show a bit more if you were doing that. You know what I mean? Like not flaunt it, but like a bit more than a standard 1-to-1. Not that 1-to-1's bad, but you know, if you've got a better way of capitalizing consistently more of the time, then yeah, why not implement it? And I am also kind of interested in futures, to be honest, like the prop firms. Anyway, so thoughts, things to talk about. So you've got thoughts going forward on going for more of a mental student RR for 4 MD clarified B2. Realization TTFM sticks seriously well, and it's for me. It doesn't even need to be hard, yeah, whatever. Because it's just got pure logic. It's pure logic. If you're analysing the strong close, and that market closed at a strong, like closed strongly all the way to the close, well, that's where the marketplace is left sat at, right? And if there's a strong intent to trade at the region that the market's sat at on this occasion, well, them same participants are likely going to be inclined to interact with the market at this region, right, in the same sort of manner, which you can then pair up with the context of like where that region is in general, which is what you've just talked about, based on like how they trade like up to the close, and then see how they traded in this manner relative to what consecutive bar push in play, and then also what at hand push in play. So you're right at the extreme relative to the at hand push, but then relative to the consecutive bar push, you're kind of just pushing on, right? Yeah, it's kind of overextended kind of quantity wise, because look, this is your previous consecutive bar push. What was in play, 1, 2, and then it kind of flipped when these started to wick reject, and then traders started to trade in this region in that sort of way that like flipped the sort of narrative with regard to the actual intent with the actual doing that market participants were willing to undergo at this region that the market was at, and how they were primarily willing to trade them, and that then just continues. But I would say it is most likely to continue. Obviously it doesn't, so that shows that like I'm not triggering myself or whatever. But yeah, you get the gist. And then but so like you're then looking at how traders interacted with the market throughout the past bar up to the closed region, which is where the market's left sat at, relative to the context of what consecutive bar pushes in play, and what a time person play. And so it's just pure logic, and then you look for the most clean way that you would need the market to set up in order to get on board that possible intent that exists around that region, and then in session, and then you then look for us entry criteria, which for me is a 5-minute CISD, and then upon the CISD, you see, does it make sense to get involved straight on the CISD itself, or do you want to see a retrace, right? It's just so clean. So yeah, so just going forward on silver, yeah, like that's a big thing, to be honest, because like I just think real time, I don't think a high R is a good thing for me actually. So yeah, anyway, I was actually considering even a 1-to-1, maybe so a 1 to 1.5. Just so if you do take a loss, because you will take losses with this, you can kind of stay in the game. 1 to 1.5 is a sweet spot, by the way, a sweet spot. I don't think there's anything else. Yes, realization, and that it's also. So yeah, I think that's it. And the realizing is also that that CRT stuff, right, is basically what I've been doing for so long. But basically, right, if you've got a bar like this, right, and also based on my experience, I can also distinguish when you can expect like this to be a certain sort of intent, which then kind of is basically CRT. So this isn't but relative to my experience, this would be fine to take on the next bar, and expect, rightfully so, that at this region traders are likely to be inclined more so on the sell side, right? And then basically what you're doing is you see this, and then you would jump on the lower time frames here, see if there's a CISD. In this case it would be on the 30-minute because you're on the 4, and then you would look for the 3-minute entry. But what this candle range theory is look at the size of this bar, right? Now, you basically, from what I've gathered, you then forecast basically how the range of that next bar is likely to span out, because every bar has a similar range, right? So look at this bar, look at this bar, that's a bit of an outlier. Look at this bar, look at this bar. It's almost the same. So from the open of this bar, you can expect a similar movement to these, and then that's when the ATR comes in to play. So, which is actually quite a good thing. So, but I would just go based on the candles itself. You don't really I can distinguish an ATR based on just looking at the chart, right? You can kind of get a gist of for example, as of this bar, what the average range is. You would probably say it's something about. You'd probably say it's about that, right? And then and then if you pull this over, this is going to be interesting. Look at this bar. So like I said, I was talking about this bar. You can see it's relatively the same. Yeah, it's a bit bigger, but yeah, you get the gist. And then if you look at this bar, kind of the same thing. Is that not exact? Basically exact. So that's interesting. And here, and then you get the gist. And then you'd maybe decrease the ATR a little bit as of here. So you see what I mean? So it's yeah. And basically it was because Tyler put and anything that Tyler posts, I'll listen, because I'm like, yo, this 4-hour AMD thing is taught me that this guy knows his shit, right? Also, this trade is invalid, didn't open below. But he said backtested like an absolute maniac today, sharpening the edge even more. No indicators, just liquidity, meaning highs and lows. CRT, candle range theory. I'm not sure what he's saying candle range theory is, to be honest, but and taking advantage of the 10 a.m. 4-hour candle, which is basically what I'm doing, which is what I've also shown before Tyler posted this, that I'm doing on the Nasdaq, right? Or going to possibly do, but that's as of London, right? Open. So it's kind of something that I came to concluded myself on my own accord, and this just kind of builds the emphasis that this is something of significance even more. And then he said that's really all you need, alignment of time frames, H4CRT with the 1M and the 15M entry models. This is source right here. Yeah, I do agree, to be honest, but he didn't really show much. I have also noticed that he does give gems and stuff, but he's not really that. He's not that much of an open book as though he says he is. You know, he's not going out of his way to show exactly what criteria it is, like I do, right? So yeah. Anyway, like I'm just zooming in on his chart, and I don't really know what he's doing, to be honest, with the CRT stuff. But I could imagine it's literally something like this. So if we'll just like as I'm scrolling along, I'm sure I will find an example too, because I don't want to make this video completely about this. But like basically like here, right? So look at this. This is a prime example. So if you've got a bar like this, you could at least expect these highs to be targeted, right? Which they basically are. But you would probably want to have a. I mean, I don't use like I use a fixed risk to reward with my thing, right? With the TTFM is what I call it. T trades fractal model. Which is where I've learned this from, and I honestly wouldn't go to Romeo. He's like a trap with the algorithm. He'll lead you in, and I'll be surprised if he's not used ChatGPT to kind of use frame how he words things like ICT, right? ICT is the OG, yeah, whatever, he can do it, but Romeo doing it, in my opinion, is really quite cringe, but somehow he's built up a large following, so yeah, he's reeling people in, for sure. Anyway, you would basically expect a similar range to what you see here, so to then be unfold from here, which is like relative to what sort of intent to trade market participants participating on this occasion have relative to probably the next 4 hour time period, right? So, and you would, and as every bar has a average range, you would expect that average range to be aligned with what sort of intent traders are likely going to have. Like, see what I mean? Like, yo, that's fucking crazy. I'm gonna leave that there, actually, and well, actually, there's not much point, but like, you know what I might do, actually? Actually, nah, I'm not gonna. I can't be bothered. But like, cause like I'll have to go back and then cut it short, and I don't really want to. But basically, there you would go on the lower time frames here, and well, yeah, like you might not even get a trade here, right? And then also you want 115 maybe even bigger than the range, right? So in my opinion, it's just a bit of like an extra confluence which isn't necessary. All you would do here is you just drop down 30 minutes, see if there's a CISD, and then look for the market set up appropriately, or it's already set up appropriately, and then the 3-minute protocol, which I mentioned at the start of the video, which is, I'll just say it again. You'll wait for a 3-minute CISD, and then if you get that CISD, you'll then see, does it make sense to enter on the CISD itself, or do you want to see you need to see the market kind of push to a certain point and then just enter, right? Because it's already CISD, so you can just because that's the logic, right? So like, if it makes sense to enter on the CISD, then you just get involved straight away, right? But if it doesn't, well, then you just basically market execute as if you were in the CISD, but at the better price relative to the scenario at hand. You know, so it's yeah, it totally makes sense to me. But like, and sometimes I can't really transcribe things that well, but you probably get it. So there hasn't actually been any trades on here, and I also think yeah, the reason why I haven't cut back is because I still need to do 2025, right? So we can just make this quicker, scroll through emails. I'm not, oh actually, it might have been here, no, ooh, no, that, I hope, but yeah, it is interesting that, and that Kabaduro guy or whatever I said writ there, which inspired us to possibly look at that like TTFM thing, to look for a bias thing, but instead, or the TTFM AMAS like approach, which is just basically TTFM, but instead of the 5M CISD, you're looking for a 5M inversion. Like, you'll upon the time it comes valid, you'll then look for like a 1 minute appropriate entry or something, and which is like relative to the scenario at hand and relative to what sort of 1 minute entry you would look for implement. And then when the 5 minute IFEG forms, you then will use that as your proper target, but until you get that, you'll just keep basically letting the market run. So, but that's like what I'm doing now, right? Like, I haven't even done much testing on it. I came up with it on my break yesterday, and I'm not at my part-time job today, so I'm gonna just get a lot of testing done, basically. So there's been absolutely no trades on silver. I don't know whether that's a good thing or bad thing, to be honest. I haven't like, there's got to be a pattern there though. I mean, if there's one trade and it's a loss, then that's not really that good. I mean, here the criteria is kind of valid, but like you might not even open above the 70 there, to be honest. But you're not even using something, so it's irrelevant. What I was gonna say is basically it's good to see the criteria still work. You know that there is edge there, but you want to have the best circumstances possible, basically. Okay, so here's the new year. You could have something here. You could. And also, with this like new clarified criteria V2, it's like it's even more high probable within itself, let alone the other refinements that let alone the other refinements I've came up with. So you would use this and you'd want to see it more pushable. Also, I need a shit, so maybe we start 2025 after that. So yeah, we can call this 2024 backtesting 4-hour AMD clarified criteria V2 X Carlson refinements, right? Which is just simply, how it places the stop loss as of now, and then also the range. So like, for example, here you've got an appropriate range if this was your entry bar anyway, and then like compare it with the past one and maybe split others. But like here, this would be fine, to be honest. You kind of got this whole range. This would be okay. If this was a buy here, this one would be okay. If this was a buy, this would be okay, because like, look at these ranges, kind of tight. But anyway, yeah, I'm gonna start the video after.